Hello, today is August 26th, 2017. At Thursday's close, I was looking for higher prices, which is what we got. I wanted a day with an early low and a late high, which is what we got. This pattern is usually positive. It usually rallies into the close. When that doesn't happen, it usually leads to more trouble, unless we gap up and promptly take out this high on Monday. As we'll see, I don't think that's very likely to happen. This is the MEJT call. Here it said ultimately higher prices would print. Said that drop was false, and we got the higher prices. This pattern here on Friday has positive and negative aspects. That means the commonest thing is we have a gap opening and a quick move outside of the day's range. The gap and the move don't have to be in the same direction, by the way. And the next most likely thing is that we close a little change and have the big move on Tuesday. Let's go over what's positive and what's negative about the pattern. But as a spoiler alert, I think regardless of what happens Monday, by the end of Tuesday's trade, we should be much lower than we are now. It's positive that we have an all-day drop and can't take out this low. That positivity is negated if we gap and quickly take out the low Monday. It's also positive we have a wall of selling into the close with this big sell-off right here at the end. That usually is not the way professionals trade. It usually leads to gapping up on Monday. What's negative about the pattern is that we've now gapped up 2 days straight. Don't have much to show for it. In fact, here's the low of the opening gap. We couldn't even, not only couldn't we hold on to these highs, we couldn't hold on to these lows. That's a very negative pattern, because this is usually when the retail customers place their orders before the open. They're all exuberant, willing to pay more than the prior day's closing prices, and by the end of the day, we can't hold on to it. It's also very negative when this pattern doesn't close near the highs, as I said. Let's look at the resistance we have at these levels. Here's the inverted diamond on stilts. Here's your stilt. Here's your stilt. That's a diamond. You can take the Fibonacci percentage of this leg, or this leg, and you can see how it has a target at this high. You can see how this retracement is also a Fibonacci retracement of the whole rally. So we dropped in a straight line to support without going through it. Either you gap under this, or this should hold. You don't just piddle around and then break down. For those who like Gann's squaring of time and price, this is a 176-point move and 176 bars from here to here. Here's the days, if you like calendar days instead of trading days. It's essentially the same thing. We previously said that the TD line break targeted 2381 minus. If you set this at 2381, you'll see you have a perfect Fibonacci pattern with this low, and this high. So I think that high is going to hold. I think this is the count. That's 1. There's your ABC for 2. I think that's 1. Wave 2 normally or I should say often, retraces almost all, but not quite all, of wave 1. So I think that's the end of wave 2. So we should be in a third wave of multiple degree here. It doesn't mean we have to drop immediately. There could be some more piddling around, but pretty soon a third wave down of multiple degrees should be coming. It's a very negative pattern. I expect this high to hold. I'd be suspicious that the call's wrong if we gapped up over this high. That should hold also, I believe. And before Tuesday's close, I look for much lower prices. And that's today's call.